Hey, good morning, guys. Hope everybody had a good weekend. Hope y'all are excited for another week of trading. I'm pretty gassed this morning, so got back from the gym, did some deadlifts today, and I'm getting older. I'm not that old. I'm only 28, but it seems like every time I do deadlifts, I just get completely freaking gassed. But I guess that's what happens when you're deadlifting 800 pounds, barefoot, one-handed. So this morning, guys, I will be live in the Simpler Options room at 10:30 for a good hour. So if you haven't already, come on and take advantage of that 7-day trial in the description of this video. Just enter the coupon code FOCUS, FOCUS, at the checkout, and I look forward to seeing you guys in there. But I'm going to make this morning's prep a bit of a quick one. I got to try to run the target here before the open and get the dog some chicken breast. That's pretty much what our dog eats, chicken breast. So looking at the structure of the market here, guys, very bullish, a very resilient market, continues to grind its way higher. However, we don't go higher without a couple of dips. So I do think it would make a whole lot of sense. And mind you, we could just continue to pump here. That's definitely a possibility. But I don't think we should be shocked if the market pulls back to the AEMA. Beautiful looking daily squeeze for the SPY. Beautiful daily squeeze here for the Qs. But these little dips to the AEMA, they're to be expected. So let's not go and lose our shit this morning. If we do end up dipping a little bit, and even back to the 21, that doesn't really change the structure of the market. So things to take into consideration. You want to have some good, healthy context to any dip in the market. Tesla is the talk of the town. It's also one of the most extended stocks in the market. However, I do think the path towards 1,000 could be potential here pretty soon. So this is basically the complete opposite of my core strategy, which is to buy a daily squeeze at the 21, but this could be a little bit of fun. So just like the market, if Tesla dips back down to the AEMA around 760, 770, I don't think you can be that shocked. It would be a big $100 pullback, but it's just a reversion back to the AEMA on a crazy extended stock. So again, put everything into its proper context. But heading into the open, we do have a nice hourly squeeze here. And what could potentially happen is that, of course, it could explode at the open. We could chop back and forth here for a little bit, getting a nice tight hourly squeeze at that point. I might be open-minded to a deep out-the-money put credit spread. Give me a 3-to-1 risk-reward ratio, something like that. I'm not trying to grow the account by 10% on this trade. Call it an income trade. Looking to make a nice little chunk of change. So going to keep an eye on the structure of the hourly squeeze, potentially hit this with a put credit spread. Personally, I do like going out to next Friday's expiration just because maybe it doesn't explode this week. Maybe it does pull back a little bit. And if you give the spread a little bit of time, I think you're a lot more comfortable. So Tesla is a wild one. We'll keep an eye on that. And then I also got the current positions in Amazon, NVDA, and pins. So a whole bunch of us right now in the group are looking at pins, using different strategies and looking at the setup from different perspectives, but it's got a good structure to it. So beautiful daily squeeze. You got your stacked EMAs. Momentum is slowly starting to shift here on the histogram. I like me some pins. So last week I did start working my way into a couple different positions here, selling put credit spreads for January 29th expiration. Earnings is the following week, so I'm selling the options that expire a week before earnings, looking to take advantage of any potential pre-earnings run. But I like the structure of the squeeze. So a couple different spreads here, selling the 69s, buying the 68s, selling 66.5, buying 65.5, selling 66, buying 65, whole bunch of them here. And those are credit spreads I'm going to continue to hold as long as we're inside the daily squeeze, is a general statement. So you got pins there, and then you got NVIDIA today. With a little bit of news, kind of partner up here with Neo. I'm not going to claim that I've read into it too much. I like the setup. Any kind of positive catalyst, hey, I'll take it. So we do have a daily squeeze, which isn't the cleanest, but I'm starting to really love the structure here, the 3-day squeeze, beginning to shift momentum. But what I've been focusing on in trading is the weekly squeeze. So I'm still holding these credit spreads through all the ups and downs because we haven't broken under that weekly 21. And the structure of the weekly squeeze has not changed. If the structure ain't changing, I ain't leaving. So for NVIDIA, we got a couple different sets here. January 29th expiration, sold the 517.5s and bought the 512.5s. And then the following week, February 5th, couple more spreads here. Sold the 510s and then bought the 505s and then sold the 500s and bought the 490s. So with a little bit of positive news this morning, if we want to call it that, can we see the 3-day squeeze and the daily squeeze really get something going here? And I do think potentially Anything taking place under 550, though it could be exciting for a little bit, might be a whole bunch of noise. We're just having a tough time really maintaining anything over 550 for the last few months here. So to me, that's kind of the core level. Would love to see it start getting some closes together above that level. And then for Amazon, guys, not the cleanest daily squeeze. The 3-day is starting to look much better. The bullish momentum hitting your histogram. You get the orange dots on that squeeze pro indicator. It doesn't get much better than that, as you guys know. And then we got the weekly squeeze, which is the time frame I've been focusing on. So another one here required so much patience so far, sitting through a lot of noise, but the structure of the weekly squeeze has not changed. We haven't closed under the weekly 21. Other than that day-to-day noise and, call it the headaches you can get if you're sitting there and staring at this crap, the structure hasn't changed. So having those rules in place for me is just so helpful. So for Amazon, we got the January 29th. So we're getting there, right? A couple more weeks. We're getting there. January 29th, and I sold the 30-50 puts and bought the 30-40s as protection. So another one where, is it doing what we would love to see it do, which for me at least is just start ripping towards 34, 35, 3600? Not at the moment. Is the structure of that weekly squeeze giving us any reason to get out of the trade? Not necessarily. So patience on these. But that's about it, guys. Got my Amazon, my NVDA, and my pins. Maybe we'll have a little bit of fun in Tesla with, call it an income trade, where we're not going to risk a huge chunk of our account. We're not looking to drastically move the ball forward. Looking to take advantage of some ridiculous momentum and bring in some nice little change. So I'll keep you guys posted. If you haven't already, go ahead and subscribe, share the channel with a friend, and I'll talk to you guys in the next video. Trade safe and stay focused. Peace.